So it's good news for China and the world economy that the zero COVID policy is being pulled back. But certainly in the short run, there is going to be a little more destruction in terms of the services sector in particular, but more broadly in terms of industrial activity, in terms of consumption, and most major indicators of economic activity. It's going to take a little while for China, much like the rest of the world, to learn to live with COVID. And I think the answer to how significant this disruption is going to be in the short run largely depends on how effective the government is in terms of ramping up the vaccination policy and in terms of getting people vaccinated so that the negative effects of this sort of dislocation can be minimized. But certainly in the short run, which I mean the first quarter of 2023, I think it's going to be rough riding. But I think beyond that, things are going to stabilize.
Eswar, you talk about the short term, but I actually caught your piece in the FT a couple of weekends ago talking about the long-term effects and the scarring. How bad do you think this is going to be on the services sector, and particularly when it comes to the labour market as well, given that we've got youth unemployment running at a record high? And if I can add to that question, how much of a setback is that going to be in terms of the government when they are looking at this sort of more pro-growth stance?
That's a very important set of questions, Sam. Certainly, the long-term effects are going to be quite significant. You know, the Chinese government had these stated objectives of rebalancing the economy towards being a more consumption-driven economy, one where the services sector played a much bigger role in terms of creating GDP growth rather than manufacturing. And of course, the COVID lockdown hit the industrial sector hard, but hit the services sector and private consumption especially hard. And the services sector, in particular, private enterprises in the service sector have been quite important in terms of generating employment growth. Now, the real challenge for the Chinese government is trying to revive both consumer and business confidence, because unless consumers feel comfortable spending again, even when the restrictions are reduced, and unless the private sector, businesses in the private sector feel comfortable about investing again, it's going to be very difficult for China to get the sort of employment growth and productivity growth it needs to sustain higher growth. And the big question is how people are going to interpret this reversal of the COVID policy. A charitable explanation, of course, is that the government is being very flexible in terms of its policy, and when it saw the need to change policy, it did so. But another interpretation, which is a lot less favorable, is that the government is quite rigid, and until things really come to a head, with even people protesting on the streets, a rare sight in China, that the government will not reverse policy until things come to a dire situation. So that sort of a mercurial nature of Chinese government's policies, I think, does create uncertainty in consumers and investors' mind, which is going to have long-term effects.